What's going on, guys? This is Foresight Capital, and today I wanted to give a quick update on the Palantir trade. So today Palantir closed down about 3% to $26.43 per share, and in aftermarket hours is relatively flat at $26.40. The biggest news for Palantir on the day was that we actually saw a breakdown from the longer-term support line that had been established since the beginning of this rally, back at around $10 per share towards the end of October and beginning of November. And that's actually indicated here by this thicker red line, and we can see that it was used to support multiple times throughout different segments of this rally before ultimately leading us to trade in this little bit of a wedge pattern that we've been following for the past about a week or so on the channel. And again, the biggest news is that we broke that long-term trend and actually fell to the downside in today's early morning trading hours. So yesterday I made a video saying that I thought that Palantir would break above this shorter-term resistance line at about the $27.65 to $27.70 per share range and continue along this long-term trend that had been established. But as the pre-market hours went on, it started to look more and more bearish. And in fact, yesterday in the video that I made saying that I thought the price was going to go up, I mentioned that these couple candles here were a bit of a bearish indicator and a little bit of a fake out breakout where we actually saw the price go above and close above for multiple hours the shorter term resistance line of 2770. But this was all in pre-market hours with very low volume. And then when the market opened and the volume came in, it was ultimately selling volume and pushed the price back down to again test this long-term support line. And we saw a little bit of the same thing this morning, but not quite to the same extent. So this was about 5 to 6 to 7 a.m. Eastern Standard Time in the United States, so pre-market hours. And we actually saw the price push above the 2670, setting a high at this candle of 2776, and then ultimately being pushed back down to test this longer term support. And when the market opened, we saw a pretty big sell-off. We actually dove below the 9 period, 50 period, and 200 period moving average, all with this same candle, and then found some support after falling to about $25.50 per share. We found some support around the $25.85 to $26 per share range. And then in afternoon trading session, we saw a little bit of a spike in the last hour worth of trading and are now back above the 9 period moving average, but still with a pretty bearish setup of trading below the 50 and 200 period moving average and a fair way away from this recent resistance. So overall, it was a pretty bad day for the stock, though not to be unexpected. While I definitely thought that we were going to continue this long-term uptrend, the wedge pattern did prove to be useful and reaffirms that the hourly chart is a really great trading indicator for this stock. We haven't yet moved to the depth of charting for the one-day chart just because there haven't been enough established trading days. So I truly feel like the algorithms and the larger traders are following the hourly chart here. And as soon as we reached the end of the wedge, we saw the sell-off and the volatility that we were expecting, though it was to the downside rather than the upside. So long story short, we did see the sell-off. We found a little bit of support in the afternoon trading hours here. So this is a good indicator that potentially bears or bulls could come back in and push the price up. Though my thoughts moving forward after being wrong about which way the stock was going to move at the end of this wedge, though being right on timing, is now that we could see a little bit of a fade back down to the 2460 per share support level, in which case we're going to test this and see if it's actual strong support. Now, it was only really used as resistance previously, so we can see that it was used as resistance back in the beginning of December and then back towards the end of November on a couple of different run-ups, but it was never really used as support except for one time, maybe twice, in the initial sell-off from all-time highs. So I could realistically see the price coming back to sort of test this yellow line at about the 2460 per share range before making another attempt back at this resistance level of 2770. Now what's interesting is this muddies the waters a bit because just as these horizontal lines of support and resistance can be used as resistance, We can also see sometimes the diagonal lines of support created by a long-term uptrend turning around and acting as resistance. So not only do we now have this 2760 level that's been a longer term resistance level, but now before hitting all-time highs, if we make a run up towards those levels in the coming couple of days or weeks, we now have to worry about this longer term trend line. So we'll have to see how the price reacts once it comes back to reach this longer term trend line. And this is going to continue running away from the current price until it's so far above the current price that it doesn't really matter. But if we did make a short term run back towards all-time highs, this would be a level of resistance to keep in mind after acting as support for such a long period of trading. So overall, not a great day. Again, my current thoughts are it was good to see that we found some support at around this $26 per share level. It was sort of used as short-term support before, though it was really kind of defined by the trading action within the wedge. And I would ultimately say that this is a bigger indicator of price action than actual support levels within these two larger levels that we've got drawn, being the yellow and red support lines, support and resistance lines. So what I'm doing now is just averaging down my position, but rather than actually buying more shares and adding to a losing position, I'm selling covered calls. So I've got now 850 shares long, and I sold 3 covered calls today. I sold 1 covered call at $28 per share, and then 2 additional covered calls at $29 per share. That brought my overall cost basis on Palantir down to about $26.70 per share. So overall, still down on the trade, but if we get back any of the gains that we gave up today, I'll be back up and with a much larger position since I scaled in about 200 shares yesterday. So keep in mind, if you want to sell covered calls, you have the ability to lower your cost basis and collect some income. You have to sell them in 100 share lots. So if you don't have a full 100 shares or have an odd number, you may not be able to sell covered calls against them. But it's just a way to help bring your cost basis down and collect some return while we're possibly seeing another level of consolidation within the stock here. Now, of course, if you're holding for the long term, it's a great opportunity to buy and bring your average share position either down if you started buying higher, or give yourself potential for even more gains now that we've seen a little bit of a pullback in price. So that being said, let me know, are you selling covered calls to bring your average down? Are you buying more? Or are you just kind of holding a pattern for now? Curious to see your thoughts. Again, if this video brought you any value, consider subscribing and giving the video a thumbs up, because I'm going to continue to follow Palantir as well as other stocks in the market. So thanks for stopping by, and I'll catch you in the next one.